Let's go through the type 1 market structure reading together on this GBP USD example. So let's first start by identifying our high, right? And remember, type 1 market structure reading, we identify our highs and our lows based on the wicks, right? So from wick to wick. And in this case, we have this market structure here, and we'll just go ahead and print some candles to see how price develops from this point. Okay, so we see price spiking below, however not closing, so there's no break of structure here, so we remain within these highs and these lows within this one impulse here. Okay, so now we can see a clear break of structure with this one candle closing below our market structure, allowing us to identify this high as our new structural high. Right? Now our low will only be identified once we start seeing a pullback. So as price is pulling back up now, we can place this as our new structural low, right? And I'm just going to keep one over here, given that this was a bearish break of structure, right? And this is our new low, right? So as price is moving back towards the highs, we know that this is within a retracement, right? A corrective move. With further price developing, we see price comes back and closes below this the lows of our structure point. So this tells us that we had made a new break of structure. We can identify this as our new high. Okay, and now we're not sure when price is going to start retracing, but once we start seeing a bottom being formed or a support, we could then identify our new structural low, which would be here on the wick, and then our break of structure happened over here, right? So now we clearly know that within a bearish market structure, we have consecutive lower lows and lower highs being created, right? Whereas in a bullish market, we have consecutive higher lows and higher highs. So now we know we're in a bearish market. So we're looking mainly to sell. Now as price pulls back within our bearish impulsive leg, we see price almost revisiting the highs, coming back towards the lows, and then eventually creates a break of structure, right? So within this break of structure, we can identify this is a high, this is somewhat of another high. Okay, so I'm going to identify our highs based on this high here, because this was one impulse to the downside. Price came back, and then from that impulse here, pushed lower. There's a little bit of substructure here. However, the highs of this one impulsive leg to the downside is at this extreme here. So this is our new high. This is our break of structure. Oops. We're not too sure where our low is going to be. This over here is our break of structure with the candle closing below our level. Now we will only know that we have a retracement once we start seeing a bottom being formed within the downtrend. Right, so from wick to wick, now we know that this is a retracement, and then we have another break of structure here, right? So this tells us that our new high is over here. Our low would be at the low of this candle, and then our most recent break of structure happened over here. Okay, so this is your low, and this is your highs. Now, as price breaks this new low, now this doesn't look significant, but this is a extension. This is a retracement, and this is another extension. Why? Because we're breaking these lows. Now, we can filter out the noise or make it a little bit more obvious on structure by going from the candlestick chart to the line chart, and you can see that we clearly have a little structure point here, right? And just remember that we're simply looking at it on a single time frame. However, if we do go and zoom into this area on the 15-minute, or let's say the 5-minute, right, we're going to see that it's significant or clearer market structure. So you have your impulsive leg here that breaks structure, then a retracement, and then another impulsive leg that breaks this structure point that we saw on the 1 hour time frame. Okay, so now we have our new low, so our new high over here. Our low, we're not sure where it's at right now, and then our most recent break of structure right over here. Okay, so let's print a few more candles to see when price creates a new low. Okay, so this is our new low based on this little retracement, but we haven't broken below it just yet. So this is our highs and our new low. Okay, now if we keep printing candles, we see what happens next, a break of structure. So we can identify this as a new high. Okay, and we're not sure at this point where the new low will be. However, this is a valid break of structure. Okay, same thing here. This then became our low as price created a support. Okay, and just to remind you guys, impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement, impulse. This is a sequence of lower highs and lower lows. Okay, it won't look as perfect as, you know, what we see in theory and what we sketch or what you might see in books, but this is a valid bearish market structure. Oops. Okay, so we have our new highs based on this high here. This is our break of structure, and then once again we need to wait for markets to create a bottom, in this case, or support, to then confirm that we have a new low. Okay, so we can say this is our new low. Then what happened right after this? We had a significant impulse to the upside, breaking structure. So now we're potentially changing direction from bearish market structure to potentially start making a sequence of higher highs and higher lows, because it all starts with this first break of structure to the upside. Okay, so let's switch this up a little bit. So now we have our low. Okay, we have bullish break of structure in this case, right, with candles closing above that wick high. And now we want to try and determine our next high, which is now over here with this current retracement. So now if we want this to confirm that we are in a bullish trend, right, or at the start of a bullish trend, we need price to retrace, however, not break below this low, and then eventually break above these highs, right? Because then that would be a new lower, well, this would be your peak low, your higher low, and then this would be your high, and then you would have somewhat of a higher high, once we start seeing price coming back. Okay, so this is just to help you visualize market structure and how we map it based on the type 1 market structure. Okay, so let's continue. We see price somewhat ranging in between these highs with a set of equal highs and somewhat of equal lows. Now price is spiking below this point. However, there's no break of structure as of yet. Okay, so we're still within this bullish impulse, right? We're spiking below, but no confirmation of a break of structure. So there's no signal that we're continuing with the bearish market. We're still in a bullish market. Right? Now, same thing towards the upside. We spike above, however, no confirmation of a break. And then I believe, yeah, eventually we do come and break this market structure to create a new low. So this would be our new low. Okay. Our new high, we're not sure where it's at, but then this over here is your break of structure with this candle closing above, right? So now we're shifting officially into a bullish market structure. This was your first low. Then this created a higher high based on this high. Then this is, you could potentially see a double bottom or equal lows. However, we know it didn't break officially below this point of structure. And then now it's creating a higher high. Okay. And if we continue, we see price creating a new set of highs here, right? With a low over here. And the reason why this then becomes a new low is because price went here, broke above this point of structure to create a higher high. Okay, so this then becomes our break of structure here. This is our new low. And then we can continue with printing candles. And same thing over here. We've established a high or a point of resistance. This then becomes our new high. And then as long as there's no break of structure here, it looks pretty close to a break of structure, but this isn't, I don't see this as a break of structure. I mean, it looks like it just closed on that level. If maybe you want to be extremely picky, you can be, okay, it did break structure. However, we like to see significant breaks of structure, so I would keep this as our highs being respected and this being our low. Okay, this is discretionary. However, if you do choose to see this as a break of structure, your new low would be based on this little retracement here. Okay. However, with the experience, I'm going to leave it as it is. And then eventually you see this as your break of structure with your new low being formed over here. And then this then becomes your break of structure, right? This is officially much more convincing break of structure here. And then we'd be looking at creating a new high, right? Once it creates resistance, then we can consider this as our new high. Okay, so you can see how from our first break of structure to the upside, from this point here, this gave us a signal that we're potentially shifting from a bearish market structure to a bullish market structure. And then this pretty much sums up the type 1 market structure reading. And in the following or subsequent video, I'll be covering the type 2 market structure reading, factoring in only the candle bodies for your market structure reading. And then, of course, in both cases, we're looking at candle bodies for breaks of structure. So it's going to be slightly different, and we'll see how it differs from one type to another.